So let's dive into this. For those of you who don't know me, my name is Allison Ostrander, and I'm the Director of Risk Tolerance here at Simpler. And last week on Friday, when this sell-off occurred, we talked about what to look for a possible hedge and the things that I look for specifically on SPX to determine if I want to start looking at shorts in my accounts or to short the market versus it being a potential fake out move. And with how this is acting right now, it appears to be a fake out move. Let's talk about why. The first thing I noticed this morning, as we talked about in the small lots room over at Simpler, was the fact that we were holding the 30 SMA as support. Right? So we opened there, we held it, we bounced up. We've had a little bit of movement intraday back and forth, but the fact is we did not break the lows of the day, breaking below that 30 period simple. That's a really good sign that we're trying to get a bounce back up. The second clue was the Bollinger Bands. We talked about this last Friday, that if the Bollinger Bands start to flare open, right, along with the break in the ATR trailing stop, then that looks more plausible for the price to head down to the 100 period simple and test it, and therefore to look at a bearish trade to play down into that range. But instead, they've remained pretty flat. And if you recall, the last time the ATR trailing stop broke, it was a similar situation with the Bollinger Bands. They remained pretty flat. They did not budge. So it ended up being a fake out move, and ultimately we worked our way back up to the price that we had before the drop. We worked our way back up to the ATR trailing stop. We ended up breaking it, turning it back into support, and then we remained in a bullish trend. So in short, it looks like a buy the dip opportunity. Now, a few things to be mindful about for that possibility to still roll over, because the fact of the matter is the ATR trailing stop did switch to resistance. So what are some things to be a little mindful about? The first thing is how the price acts if it comes up to hit the 10 SMA, or if you like to use the EMAs, right, maybe the 8 EMA for y'all. And that price is right at 66.97, so right by the psychological level of 6,700. If the price tests this range and starts to pull back, we do want to be a little mindful on if it pulls back into the lows of Friday, and in turn how the Bollinger Bands act. If the Bollinger Bands start to open lower and we start to put pressure on Friday's lows, then playing to the downside in that hedge is back in play, right? Playing a broken wing butterfly towards the 100 period simple seems like a good idea if we end up failing to break above the 10 and things start to reverse back down. Now, if they do reverse back down, but we don't get below Friday's low and the Bollinger Bands remain flat, then I would still look at this as a buy the dip opportunity. The good news about this is if it is a buy the dip opportunity, we're right by the lows and we can play for a bounce up. There are a lot of things that were on discount Friday, so if you bought in, you're probably pretty happy with how they're looking today. However, the other side of that coin, right, is let's say we buy the dip and we're wrong and it starts to break. Well, the good news is our stops should be a lot tighter with it being right here around these levels that we're buying, right? We're not buying up here near the highs and having to sit through all this pain. We're buying down here, and then the same rules apply. If we break the lows of Friday and the Bollinger Bands start to flare open lower, then that's our stop, right? If the close of the day is below that level, that's not looking too good for bulls, and then we switch gears and play for the hedge down into the 100 period simple. But if everything stays the course, even if this remains in a bit of chop, I would still look at it as a buy the dip opportunity to play back up in here. And the trade that I've been eyeing on SPX for that possibility is some sort of broken wing butterfly. Now, last time we had a fake out move on the ATR trailing stop, we were back at the highs of that move by the end of the week, right? Relatively speaking, we were back there in just 5 trading days. So if we go with the same idea, let me get to the right tab. There we go. So if we go with the same idea over here with SPX, that would be back to around 67.50. So a debit broken wing butterfly, where 10-point spread width on the debit spread, 5 on the credit spread, is about $1.10. So not too bad. Our max profit potential, if we pinned at 67.50 on Friday, would be $8.90. If it goes completely in the money, The beauty of a debit broken wing butterfly is it has a forgiveness factor, and the trade would still be worth around $3.95, $4, depending on our fill. So excellent risk versus reward on the dollar cost basis. Now, if you like the idea, but you think by the end of the week might be a little too soon for this reversal move, right? Especially as we're starting to get some selling here into the close, then we might consider going further out in time to the end of month. I would still prefer to play around 67.50. So let's price out how much a debit broken wing butterfly is with a bit more time. And you can see that cost goes up a bit more, $2.20. Still a nice max profit potential, though, of around $7.80. If it goes completely in the money, it would still be about a $2.80 profit potential. So pretty good risk versus reward still. If you really like this trade idea, but you just didn't want to spend this much, but you still want the time on it, you could try to bump it up a bit more. The ATR trailing stop right now is just slightly above 6,800. So that's probably the furthest I would put this trade out in regards to strikes, right? The highest I would go is probably for a 6,800 pin. Certainly a bit better on the cost, only about a dollar. Let's move it around a bit. Let's say $1.60 right in the middle there of the mark. 840 max profit potential, completely in the money, 340. So excellent risk versus reward scenario, guys, for a potential buy the dip opportunity here. If anything, to me, this looks more like consolidation because momentum's just getting a nice reset. We're already likely going to cancel out of the pullback signal that happened Friday, right? That was all the pullback it was looking for. And we're building energy into a squeeze. So getting a little bit of consolidation, getting that energy built up. As long as you give yourself some time on the trade, eventually I think we'll get back into this range, if not for a move higher. So as of right now, this looks like a fake out move. We'll continue to keep an eye on the 10-period simple and on the Bollinger Bands and how the price reacts with them. And like I said, as long as the Bollinger Bands remain flat and we don't break and close below Friday's low, I would be viewing this as a buy the dip opportunity. As always, may the trade be with you, my fellow Jedis, and I look forward to talking to you next time.